welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. It's that time of the year again when the young and restless are looking forward to an exciting start to their careers. The right marks, the right college, and hopefully the right finances to back up all of those dreams. So whether you are a student or a parent, the question is, have you planned right for higher education? What are the do's and don'ts as you go about pooling funds for your college? Well, that's exactly what we are here to discuss with personal finance expert Harsh Roongta on this week's show. Mr. Roongta, always great to have you on Money, Money, Money. Thank you for coming in this week as well. So, questions have been coming in and people are applying. And I was just having a conversation and, it was about how the cost of higher education has really moved on from the time that I was in college and probably from the time you were in college. What sort of trends do you see? I mean, as people are now trying to plan a little better, has the awareness level itself increased?
Obviously, earlier people didn't really plan that much, now they do. And obviously, education inflation costs are something that they do take into account. I think if you look at it twofold, one is education costs in India and say education costs, let's say US, because that's a very particularly popular destination as far as engineering or MBA is concerned. If you look at US, where the costs are a little more mature and I mean you have more of a trend, I think you see a quick Google search shows that dollar costs go up about 7% on college education. Plus, if
we're talking about an annual
7% CAGR. Plus, you have to take into account the fact that the rupee depreciates against the dollar. And that's roughly, historically, if you look at it, that would be 3.5% to maximum 4% per year.
So you're talking about, roughly speaking, a 10% increase in cost of higher education?
10 to 11% increase in the rupee cost of education if you look at it in the US.
Right, but that's the US. I guess even here in India, gone are the days when college education was cheap, particularly when you're looking at technical education and, highly specialized courses, right?
So I think in India the situation is far more complex because for a very long time we have been accustomed to subsidized higher education, and I think subsidy is going away in parts. So you would plan very differently if you think your child is bright enough to get into what are quote unquote called merit seats versus what are called donation seats. So the same course, if in the merit seat, medical for example, in the merit seat might be 4 lakhs to 5 lakhs to maybe 7 lakhs a year versus in the donation quota that might be 25 to 30 lakhs a year. So in many cases post-graduation costs, medical post-graduation costs in India can be more expensive than medical post-graduation costs overseas.
So very clear that it's extremely important to start planning because no longer is higher education cheap, even in India. We've been getting lots of questions, so let's do that. Let's start addressing some of the queries. We have our first caller online. I think Miss Neha Walia is with us. Hi, Miss Walia.
My daughter has appeared for HSE and she wishes to pursue B.Pharm. And the total private fees for all the private colleges ranges from around 14 to 20 lakhs. So I would like to go for an educational loan, but I do not require the entire amount at one go. I will be requiring around 3 to 5 lakhs per year. So how should I go about it?
Well, you've called in the right time, the right show, because we have Mr. Roongta here. I guess it's a question that, touches a nerve with a lot of people. Education loans, the rates of interest, how do you even start?
So I think education is a very different kind of a loan. As she rightly put it, the loan amount is not required upfront.
Yes.
It's required over 4 years. But you would like to know that you would get it in those 4 years. So you want the commitment today.
And at a certain rate of interest, so you can calculate your cash flows.
Plus, even that requirement may go up because the fees may go up during those 4 years. So it requires a bit of a planning. Well, the good news is that when she will go to the banks, and the public sector banks are the larger players, are in fact probably the only players in education loan apart from the specialized educational loan companies. There they would be in a position to sanction her a loan for the entire course period, which can be disbursed in stages. And whatever she gets, she pays interest only on whatever she gets. She won't have to pay interest on the amount that is committed but not disbursed. The risk that of course she will carry is that the fees will go up more than the loan amount, but I think that's a risk that she will have to carry. Obviously the bank might insist on collateral, the bank would insist on the parents becoming a co-borrower along with the student, and because the loan amount is more than 7.5 lakhs, what she is seeking, they would seek collateral in form of some immovable property or movable property or any other collateral acceptable to the bank.
So I picked up the State Bank of India fact sheet just to get a sort of a ready reckoner, a simple check. And it's interesting. Now, SBI has a student loan scheme, and there the rates vary. If you're taking a loan less than 7.5 lakh rupees, then the rate is 10%. If it's above 7.5 lakhs, then it's 10.75. And then they have various other offers. For instance, loans specifically if you are taking an IIM education, other institutions. And you mentioned collateral, and I think there are certain discounts attached. If one can provide collateral, then you get a slight small discount maybe on the interest rate attached. Are most of these rates pretty uniform across PSU or private sector banks?
So private sector is largely absent from the education loan space, except in a proxy form, and we can discuss that later. The loan rates for education loans would be similar between the public sector banks. I mean, there would be 0.25%, maybe even 0.5% difference. Some banks have concessions for the girl student. Some banks have concession if you give a collateral even below 7.5. Above 7.5 collateral, every bank would ask
anyway.
for.
Yeah.
So those differences clearly are there. But the fact is that otherwise between the PSU banks, there is not much of a difference. Education loans by definition are risky for the bank. Please remember, they give the loans. They have to wait for 3 to 4 years before repayment starts, or 2 years, depends whether it's post-graduation or graduation. So they don't even know whether this loan is going to be good or not. PSU banks' experience with education loans hasn't been great. And that's why you find education loans are more expensive.
Yes.
At 10 or 10.75,
Yes.
they are far more expensive than say, let's say, a regular loan against property.
Yeah.
The same client, if she has a property which is free and she has income which will allow her to take a loan against property, she can take a loan against property at probably 9.1 or 9.2% versus an education loan at 10 to
7.75% at the higher level.
One of the things that the banks scare you, what they scare you is you won't get the tax break if you take it as a loan against property.
Right.
I want to reassure viewers who are watching this that as long as you take a loan from a bank, as long as the loan is used for the purpose of higher education of your child, the deduction for interest paid will be available.
Even if it is a loan against property?
The name of the loan is immaterial. What you are going to use it for, and you'll have to prove that I have used this for the higher education.
And how do you prove that? You'll have to attach supporting documents.
So today with the return, you don't have to prove anything. They don't take supporting documents. But if your return is opened for scrutiny, the tax officer might call for documents. You can show that, see, the loan was disbursed directly to the school. That's one possibility. Or the loan was disbursed to me, and from here next day I have paid it to the
education
There is
institution.
a clear match between receipt of loan and the payment of the fees.
All right, so Ms. Walia, hopefully that answers your questions, and you also have an alternative, as Mr. Roongta has pointed out, that maybe education loans aren't the only form of borrowing you can look at. There are other products in the market that will allow you to generate those resources to fund your child's higher education. In fact, we're going to take a quick break, and that's exactly what we are going to talk about, because other questions come to mind. Should you be looking at your FDs? Should you be looking at your mutual funds when it comes to financing your child's education? We will discuss that after the break.